So good evening, students. Good evening to all of you. So now, students, today's class, we will be discussing certain very important areas. Perfect, Radha. Good evening. The area, students, that we are going to pick it up will have a lot of, like today, many ICDS also will come into play. So a lot of discussion, students, will take place in the today's class. Just confirm once, students, whether the we'll just share you would have received the notes on the actual cost. If you can just confirm once. Actual cost and WDV. This one, students, all of you got hold with this note. Rather, you can all confirm. Kanaya, no? The actual cost and WDV. Okay. Anyway, students, you will just not an issue. But the previous particular notes has been received, isn't it? This will be there, students, in your portal now. I think. Okay. So this would be there in your portal in the next particular week or so. So let's start, students, then. Last lecture, students, please recall in our discussion that we all had. The discussion, students, that we all had in the last session, students, was in respect of the actual cost. We have discussed on that particular part. We introduced the judgment of Supreme Court in Challapalli Sugar Mills Limited. Because why this actual cost is important, students? At the end of the day, students, every business, when they start a new business, primarily they have the new assets, and the new assets will enter into your block at an actual cost. And finally, that actual cost will become your WDV. So if there is a wrong particular cost, if it enters into your block, a wrong particular cost, if it enters to your block, it will result into a wrong WDV. And not only for the current year, in the subsequent year also. So that is the essence of the term actual cost. Now you can understand the implication or the importance, why this actual cost becomes such an important thing, because this becomes the foundation of your WDV for not only for the current year, but also for all the subsequent year. And hence this concept needs to be understood under the head PGBP, or for that matter, for the income tax law, the concept of actual cost. We discussed in the last lecture, students, the landmark judgment of the Supreme Court in Challapalli Sugar Mills Limited. In that particular judgment, students, I have told you already in the context of Challapalli, students, all of you are aware of it, isn't it? In the context of Challapalli Sugar Mills Limited, what has happened? The main principle that was discussed in this was the word price. The distinction was made between the term price and the term cost, isn't it? And these two terms are not same. They are not synonymous. So what is therefore the cost, students, as per the Supreme Court judgment in Challapalli Sugar Mills Limited? What it has said, that the cost is a term which no man with a commercial understanding will misunderstand this term. Which term? Cost. Any expenditure which is linked with the process, process of what? Of bringing the asset into existence or putting the asset into its working condition, those particular expenditure will be a part of your cost. And that exactly was a core principle that primarily that particular judgment has given. Any expenditure which is linked with the process. Which process? Bringing the asset into existence or putting it into its working condition. that will be a part of your cost. I hope that all of you are clear with this one, every one of you. This is what was the principle in that judgment of Challapalli Sugar Mills Limited. Now that was in respect of a loan which was taken to purchase an asset or to construct an asset. So the Supreme Court laid down this very important principle, probably which now we see in the borrowing cost as your accounting standard, or even for ICDS 9. ICDS 9 students that we will touch upon today is on the borrowing cost. But the base was the judgment of Supreme Court in Challapalli. So what happened in this judgment? Loan was taken for purchase or construction of plant, and on that the interest expenditure was incurred. So therefore, interest expenditure up till the date the asset is put to use or the business has commenced, as the case may be, that interest expenditure would be capitalized, and thereafter whatever interest expenditure has been incurred, those expenditure will be allowed as deduction. Those expenditure students will be allowed as deduction. I hope that all of you are clear with this principle, every one of you. So this was in this regard. After that, once this concept was clear, as per the judgment of the Supreme Court, once this concept was clear to all of you, then I gave you a particular case on the cost, where the cost gets added and where it got reduced. We will discuss the reduced part now primarily, and the reduction, students, if you see, I gave you three things. And what was the three things, students? The three things that was there was, one is the portion of the cost which was met directly or indirectly by other person. That portion of the cost which is met directly or indirectly by the other person, this is one thing which was there primarily, that has to be reduced. That portion of the cost which is met directly or indirectly by another person. I'll give an example also. As we proceed now, we will just try to take those examples and maybe some questions also on that note. Then the second one, students, if you can recall, was about the GST on which you have taken the ITC, or any duties and taxes on which you have taken the credit. You have taken the credit in that particular case also, students, those duties and taxes will not be a part of your actual cost. I hope that point is also taken care of. There was one more thing, students. What was that next, students? Quickly, anyone recall that? There was one more reduction that I have told you in this context. What was that? Quickly. Subsidy. Yes, indeed, students. The most important one, because then there is an ICDS number 6 on subsidy. And students, if a subsidy is in relation to a depreciable asset, repeat with me, if a subsidy is in relation to a depreciable asset, then that amount of the subsidy have to be reduced again to determine the actual cost. That amount of subsidy, students, will have to be reduced in determining the actual cost. And this is what exactly, students, we are now going to discuss. All these things was there. So herein, what exactly the things are there? Students, just have a look on the slide. Those same thing. As I told you, students, all the module page numbers have been given. The flow is this. This is how you can revise it so that you can consolidate everything in one place. Isn't it? So therefore, the part of the cost as has been met directly or indirectly by any other person. GST on which you have taken or excise duty, even excise duty earlier, and now, or maybe in the state excise duty, or for that matter, the CVD, on which you have taken the credit, and the subsidy part. Now, this part, can you see this point number 5? I'll discuss this thing later on. Let me, in fact, come across straight away to our main particular this thing. This is small deduction, but these are the list of deductions that you will take from the price of the asset to determine the actual cost of the asset, and that actual cost will enter into your block. This will be the block value. I hope that all of you are clear with this one. Okay, now let's have a look to the first one. Students, what could be the example over here? Like, for example, students, supposingly a holding company has purchased, a subsidiary company has purchased a plant and machinery or has imported a plant and machinery from abroad. Subsidiary company. Say the worth is about around 10 crores. And then in that case, the holding company says that the 20% of that particular cost will be borne by us. Therefore, the question to all of you would be that in that case, the cost in the hands of the subsidiary company would be 8 crores because the portion of the cost has been met by the holding company. Is that clear to all of you students? This is precisely what it is in this regard. This is there in this regard. So therefore, that is one of the examples. There can be any other example. Like say for example, installation expenditure, which has been there. Now, whether installation expenditure, does it form a part of your cost? Answer is yes. I told you Challapalli Sugar Mills Limited. What Challapalli says? All that expenditure which is incurred till the time the asset is put to use, those expenditure will be a part of your cost. But the question therefore is, you are the one who has to be, the cost as a concept has to be associated with the person who is bearing the cost. When you have not borne the cost, then how can you say that? Because please understand, it is the actual cost to the assessee. So the assessee, when we read this particular entire term together, the actual cost to the assessee. When we read the entire term together, it means that the assessee is the one who is bearing that cost. So if some portion of the cost has been borne by some other person, so what will be the actual cost to the assessee? That will be reduced. If you read the entire phrase, students, the concepts become very clear. As we read those particular phrases, the concept becomes more clear. Now, let me actually, there is one very important concept, and this is where the new law students has taken a big change. The new law students, loan against. So, loan has been taken, students, be careful what I'm saying now. Loan has been taken for acquiring what? The plant and machinery. This could be an important one, students. So, supposingly loan was taken by the SSE, and on that loan, the plant and machinery was acquired by the SSE. Okay. Subsequently, there was waiver that was being given on the loan amount. Subsequently, waiver was given, students, on the loan amount. Therefore, again the question arises, if the waiver has been given, if the, to this confirm once if all the technical things are clear. संकेत जी ठीक है सब टेक्निकल स्ट्रीमिंग में थोड़ा सा इश्यू दिख रहा है true just confirm once no that presentation part that I have already have done this so that is fine that I have already done right now I'm talking about the streaming part the audio video संकेत जी एक बार कंफर्म कर लेंगे आप स्ट्रीमिंग ठीक है ना कि स्ट्रीमिंग में मुझे थोड़ा लैग हो गया था ऑडियो वीडियो में एक बार वो ठीक जा रहा है नहीं वो तो ये तो ठीक है ये तो मैं अभी ठीक है वो तो मैं स्क्रीन छोटा किया तो मैं इसको कर ठीक है ओके नो तो स्टूडेंट्स नाउ देन so what I'm trying to say to you is the loan part. So therefore, if supposing the SSC has taken the loan, the SSC has taken a loan on the property loans, loan against the property. So just focus on this particular part wherein the SSC has taken the loan against the property. Then in that particular situation, students, what would have happened? That loan has been taken. And say for example, 20% of the loan subsequently, say loan was taken of 1 crore. And then the assessee, out of the loan and plus his own money, he has purchased a plant of 3 crores. Okay, loan was taken of 1 crore. Then the assessee, out of the loan plus his own money, he purchased a plant of 3 crores. Subsequently, the bank gives some waiver on the loan amount. Subsequently, the bank is giving some waiver on the loan amount. Therefore, the question to all of you students is whether the waiver which the bank has given, whether that waiver on that loan, will that be reduced from the actual cost is the question. Whether it will be reduced from the actual cost, students, is the question. Waiver of the bank loan. And the answer, students, is no, it won't be. Be careful on this regard, students, now. What has been said? Now, there are two particular type of decisions which is to be considered very carefully. One is this, where see, if the bank has given you a loan, you have to use this loan to purchase an asset. So, in that particular case, if bank gives you a waiver, the question is that waiver per se can be reduced from the actual cost, and the answer is no. See, you have done only an application of amount. These are two different transactions that has happened. One is a financing transaction that has taken place for which you obtained the loan, and second was the asset purchase. Two distinct transactions that has taken place. Now, in that situation, primarily, even though the SSC may have said to the bank that I would be using this loan for my business purpose, that does not suffice for the purpose of reduction. Because what is required is that a part of the cost is met by the other person. Please see the language of the law. Part of the cost is met by the other person. So take this one example. Now I give you another example. In another example, the bank directly enter into the transaction with the supplier of the machinery, and they say that, look, you please go ahead and we will be releasing 1 crore to you, and you supply this particular machinery to him in this context. Wherein in this context, so a particular directly, it means the transaction is made in such a way wherein the bank is directly into the purchase transaction or supply transaction. So if that transaction is linked with the supply itself, when the loan is linked with the supply itself, directly at the source, who is the source? The vendor. So accordingly, the documentation will be made in this behalf. And the documentation will be like a tripartite documentation for the supply transaction. And in that, if supposedly portion of the amount, if that portion of the amount is being waived off, then can we say that some portion has been met by the other person? And the answer is yes. Please appreciate these two particular distinctions, students, in this context. So in the first case, loan has been given primarily, and in that context, the SSC has used the loan to purchase an asset. Subsequently, on the loan, there is a waiver that has been given. So whether the loan which has been waived off, whether that will be reduced from the actual cost, just because SSC happens to choose to use the money to buy an asset, answer is no. Because the choice was always available to the SSC. Whereas in the second example, was the SSC has any choice? No, it was a tripartite agreement wherein the loan was given or loan was associated at the supply stage itself. And in that context, if there is a kind of a waiver of the loan, in such particular case, the actual cost would be reduced. Now, in the examination, students, be careful. If the question is so specific, and they are associating loan directly with the supply transaction, then definitely you can reduce it. But if it is only talking about that the SSC has taken the loan from the bank, or the bank has given the loan to the SSC, and that loan was used for acquiring the asset. SSC has used that loan for acquiring the asset. So which means that the SSC is having a discretion in that scenario. And if subsequently there is a waiver, you will not reduce it from the actual cost. I hope that this concept is all clear to all of you. Now, this results into another concept. And what is the another concept? Pay attention to this. This is an important one. Fine. Waiver of loan in the first example will not be reduced from the actual cost. Waiver of loan in the first example will not be reduced from the actual cost. Question is, can that be considered as an income to be charged as a benefit? Can that be considered as an income to be charged in the hands of the SSE? This part, students, is the most important part. This part, students, is the most important part in this context. What is your take, students, in this regard? I hope that this question, all of you have got hold with this one. I hope that rather your query is sorted. The query part that you have asked, that has now been considered. So eventually the SSE is using, that's an application. The charge has to be on the loan. These are two things. Did the SSE had a discretion to use the loan for any other purpose? Yes, in this case. So when that particular thing, the SSE had that particular level of discretion for the purpose of using the particular loan for any other purpose in that scenario. In that situation, in this case, these becomes a two independent transaction in this context. But in my second example, did the SSE had any discretion? In the second example, did the SSE has any discretion? Answer is no. Why? Because the bank was a party in that transaction of supply of plant and machinery, wherein there was a tripartite agreement, primarily in which case, and because of this tripartite agreement, what happened was is that this particular transaction was made with the understanding that bank will give 1 crore and 2 crores will be given by the SSE, and therefore this 3 crore would be supplied to whom? To the supplier, and the supplier accordingly will supply. And in that, then there is a waiver, then yes, we can say that could be reduced. Coming back to my question, my original question. What is my original question? In the first case, where the bank has given the loan, the bank has, students, given the loan, general loan, and then the loan was used by the SSE for purchase of an asset. The loan was used by the SSE for purchase of an asset. And what happened? The loan amount was being waived. The loan amount, students, was being waived. So I told that in this first case, the loan waive will not be reduced from the actual cost. The loan which is waived will not be reduced from the actual cost. The second question that emerges is, in this case, what shall be the treatment of that loan amount? Will the waiver of the loan amount, will that be charged to tax? Now, students, this is an important particular concept because this is the law before and law after. Students, be careful here. I just want to show you important now provision. Exactly what it is. Earlier, the judgment was, one judgment was there in Mahindra and Mahindra. Please have a look that there was judgment which got overruled. See the provision. This is a very important particular part, students, for all of you. Here, students, if you see in this particular paragraph, last paragraph, whether the waiver is itself taxable as a separate question and does not fall for consideration 39. 39 means actual cost. Okay, 39 is about determination of actual cost. So whether that waiver will that be taxable as an income separately is a separate question to be answered, not considered in the actual cost. The court has held that waiver of loan taken on capital account means, in my example, the loan was taken for buying an asset. So the court has held that waiver of loan taken on capital account was neither a remission of trading liability, students, we will come on that, nor a taxable benefit on the ground that the benefit was received in cash. Because the benefit, they have said this particular part, the benefit was received in cash. You say the benefit was received in cash, fine. But the more important part was that, students, that waiver of a loan was taken on a capital account and therefore it is not taxable. There was an old judgment of Mahindra and Mahindra 2018 Supreme Court. Now, students, I want to show you the law which got amended by thereafter. This is a very important part in module page 3.26. what it says under the present law. Friends, under the present law, section 26 charges the value of benefit or perquisite arising from business, whether convertible in money or not. Friends, this is where the law was earlier, before the amendment. You need to know what was the law which was there earlier. Meaning thereby, if you see whether convertible into money or not, so benefit or perquisite, whether convertible into money or not. What do you mean by this? This means nothing but benefit in kind or perquisites in kind. Because they are using the word whether convertible into money or not, meaning thereby benefit in kind. Convertible in money or not convertible in money. So something is convertible in money means, but that something is in kind, and something is not convertible in money. It is priceless, isn't it? In that scenario, like for example, motor car has been given to you, but not sold to you. So when the motor has been given to you, so we do the perquisite valuation. Why we have to do a perquisite valuation? Because this is not convertible into money. What exactly is given to you is for use, not for the purpose of sale. It has not been sold to you. It has not been given to you as a gift. So we don't know. It has only been given for use. So this benefit is not convertible. So therefore we do the valuations. That was the logic of valuation, isn't it? The valuation rules that you have learned in salary. So here comes the real challenge, friends. Earlier law was taxing the benefit or perquisites arising from business only if it was in kind. Only if it was in kind. Is that clear? Now, thereafter, there was an extension in the language or in cash or in kind or partly in cash or partly in kind. Meaning thereby, thereafter, the consideration if you receive in cash or maybe benefit in cash. Cash means obviously in bank or don't think a raw cash, which means in money. So if the benefit is in money, or in cash, which we say, in that case, now whether that will be taxable, and the answer is yes. If this is the benefit arising from business and that benefit is in money, then will it be now chargeable? And the answer is yes. So now, students, the position is if the bank has given a loan and you have taken the loan for any purpose, subsequently the loan has been waived off, then that loan which has been waived off is the benefit that you have received in money? Answer is yes. Because now you don't have to make the payment of our loan. So you receive the money and now you are no longer obligated to pay that money back. So the benefit is in the money and that benefit has arisen in business. So now whether it is chargeable? Answer is yes. Now, whether it is chargeable, friends, answer is yes. This is exactly what is the amendment, friends, which is very important. I hope that all of you are clear with this one. If that is the case, friends, we shall proceed. Please confirm us quickly. Every one of you. Perfect. Radha, Kanaya. So just be careful of this. When they added cash, so now benefit received in cash, benefit received in cash, which means in money, will now would be charged. So although it may not be reduced from the actual cost because of that concept which I told you, nevertheless, that loan which has been waived will still be charged. The loan which is waived will still be charged separately under the head PGBP, because now the charging section under section 26 says that the value of the benefit of perquisite, whether that value of benefit is in kind or it is in cash, whether that value of benefit it is in kind or in cash, in both the cases now the chargeability is attracted. This is a simple word explanation of this very important particular concept. So with that, students, now let's take it further. In this case, so this is all about this one first concept. So this is a typical concept which you should be very careful on. Portion of the cost made by other person. In portion of the cost made by other person, this is a very typical case situation. What is a typical situation? If there is a waiver of loan, what is the treatment of waiver of loan? So students, in this case, treatment of waiver of loan, what I have told you in this case? Simple, if there are no such provision where the bank is a party, it's a tripartite supply agreement. If that is not there, if the question is silent, they only say loan was obtained by the SSC for take purchase of the asset. Subsequently, the bank waives the loan. Then that waiver of the loan, you have to conclude by saying will be charged as what will be charged as P profit and gains from business and profession. Let's proceed further, students now. Now, the next particular part, the GST thing, students, I think this is clear. I will directly take one example, students, the GST. Yeah, if you take a credit, students, if you take a credit, will that be the case? Yes. So if you see this example, basic selling price, it's a simple one. You people would have done it, but still, we'll run through it once. 40 lakhs, GST is 18%, thereafter the 60. Freight, transit insurance, will that be added? Yes, it will be added. Erection, foundation and trial run, will that also be added to the cost? Yes. So 2 lakhs is coming from here and this 40 lakhs. So 42 lakhs is the amount. 42 lakhs students is the amount. Now if the ITC is claimed and allowed, students, without looking further, ITC is claimed and allowed, in that case it will become how much? ITC it is claimed and it is allowed, so obviously it is 42 lakhs. You will not add 7,20,000. But if ITC, like block credit, students, the concept of block credit is there in ITC. If there is a block credit that happens, in that situation, students, will you then have taken any credit? No. So whether this 7,20,000, will that be a part of your cost? Answer is yes. Answer is yes. So that is the thing that you should just bear it in mind, and let's try to take it further. Now, students, this particular thing, the next particular part which is there. The cash payment exceeding 10,000 in a day. I think this point also you have taken, you would have known. We already have discussed this point, but for the disallowance point of view, remember that 10,000 or rupees 35,000, which is the expenditure of rupees 10,000 or rupees 35,000, which is paid on a single day. Otherwise, then by way of an account paid check or by way of an account paid draft will be disallowed. Okay. What about an asset which is purchased for which you are paying the consideration to the vendor or to the supplier in excess of rupees 10,000 on a single day, otherwise then by way of the prescribed means, then in that case what you will say? Will you say it will be disallowed? In your reason, students, will it be disallowed? Don't use this word, students. In your reasoning, when you have to reason your answer, never ever use the word disallowance for something which is not allowed as deduction. Never use the word disallowed for something which is not allowed otherwise as a deduction. This expenditure, students, tell me one thing. This expenditure which has been there, you all are aware of it, isn't it? Only what is allowed to you as a deduction, any expenditure which is allowed to you as a deduction, only in respect of that you say it is disallowed. Something which is not allowed as deduction, can you say that it is disallowed? Answer is no. So here also, when you have to reason out, you will say that, say for example, SSC has purchased a plant of rupees 5 lakhs. Rupees 50,000 has been paid by him on cash as a booking amount, and balance 4,50,000 he has paid by account pay check. So what you are supposed to say in that case, you will say that 50,000 that he has paid in cash on a single day, that will not be a part of the actual cost. Please mark this kind of a language that you want to use. This rupees 50,000 that he has paid on cash will not be considered as a part of the actual cost. Don't use the word disallowed. The moment you use the word, that's it. So thumb rule, students, allowed as deduction, disallowed. This phrase is used only in respect of that expenditure which is allowed or disallowed for deduction purpose. Okay, for deduction purpose. So this will be, students, there in this case. By the way, students, if you remember, in that expenditure of 10,000, there we also have this 35,000 for the GTA, for goods transport agency that you give. So the limit was 35,000 here, but the limit is only 10,000. Okay. Now, students, what are the prescribed means? These are the cases of prescribed means. You can just go through it. Probably, as a homework. This is something. This I need not tell you. These are the list, which is probably the prescribed means which has been there. One is by the check and other by the electronic mode. Electronic modes are all prescribed over here, and this is what it is. Electronic modes are all prescribed over here, and this is what it is. Let's proceed further. Now, the next one, which is the most important one, which is about the subsidy grant, because this takes us to ICDS 7 in a very simple way, because in this case, students, you just understand the principle. Now, the moment ICDS 7 came, students, subsidy, technically speaking, have to be, or just, I will tell you, subsidy after ICDS 7. Now you have to bifurcate into two parts. One, subsidy is for a depreciable asset. Second, subsidy is for others. Now, say for example, subsidies for others. In that others, you can also have a non-depreciable asset as well, like subsidy for land. So others can have a very large area. So now we have to distinguish whether the subsidy that you have got, is it in respect of a depreciable asset or it is for others. In others, it can be for non-depreciable asset or for some inventory or some for other operations, business operations, etc., etc. It can be anything now. So if the subsidy is in respect of a depreciable asset, then what I have told you last time, we are supposed to reduce while arriving at the actual cost. We will have to reduce while arriving at the actual cost. And if it is for any other purpose, students, then what we are going to say, then in that situation, it will be considered as an income of the SSC. It will be considered as what? As an income of the SSC, students. I hope that every one of you are clear with this one. Now you just say, but even if it is a subsidy which is in respect of a land, will still it be considered as an income? Answer is yes. Answer is yes. So just now remember, the subsidy now is to be bifurcated into two types, and this is what it is. Now, students, just since we are in ICDS 7, we all know ICDS, students, income computation disclosure standard. I already told you that ICDS is to be applied in the case of SSC who wants to compute income under which head? PGBP and IFOS. What about house property, capital gains and salary? Whether for these three heads, will you be making the application of an ICDS? Will you be making an application for an ICDS? Answer is no. Why? Because there we don't require any external computation. There is no external computation there. Primarily, everything right from the first value till the last value is determined in that head. There is no dependency on profit as per the books. There is no dependency on profit as per the books for these three heads, as what it is for PGBP and IFOS, because the base profit is what? The net profit. And the net profit is as per the accounting standard or commercial accounting principle. And therefore, to adjust that, the ICDS is what is to be considered. And hence, ICDS is applicable only when the SSC is required to compute PGBP and IFOS. Is that clear to all of you, students? Now, what it covers, students, in this case, just have a look. What it covers. So, it covers the third paragraph, government grants. They use the word government grants. And ICDS 7 specifically recognizes that these go by many other names. So you will use the word government grants. Don't use the word subsidy, because subsidy is one aspect of the government grants. So what are the names? Subsidy, cash incentives, duty drawback, and so on. What it does not cover, and overriding rule, students, over here, that we will see in this case. Just quickly over here in this context, students. This is very important. 5.2. Recognition when it is granted. So two things: when to recognize and how to recognize. Subsidy ICDS 7, what it says, write it down, students, in your notebook. Subsidy ICDS 7, what it says, When to recognize? When means the tax year in which it will be recognized. The tax year in which it will be recognized. And what is the second thing that you are going to get? How to recognize. Second thing that you are going to get, students, would be how to recognize. What do you mean by how to recognize? Next to that, you will write treatment. Treatment, students. Okay. Now, if you see over here, recognition, students, when to recognize? Please have a look. The government grant is the first particular point. First particular point, students. The government grant is recognized when there is what? The government grant is recognized, students, when there is a reasonable assurance that reasonable assurance, students, always this is a consistent word. Where else that you got reasonable assurance phrase that you would have read earlier also? I have made you write also something which is to associate with reasonable. Something which was associated with reasonable. Indeed, that was in respect of the provision contingent liability. Isn't it? There was also this word reasonable associated in that particular ICDS 10. And what was that, students? What was that? Yes. When there is a reasonable assurance that the expenditure will be incurred and it could be reasonably, can be estimated. So, if these two conditions are fulfilled, then we can say that the provision for contingent liability will it be allowed as deduction? And the answer is yes, it will be. So here also, students, if there is a reasonable assurance that the person shall comply with the condition for which you have been given the government grant, but the government may have given some condition, isn't it? And there is a reasonable assurance that I am going to comply with that condition. And what is the second point? The grant shall be received. The second point is the grant shall be received. I give you one example. Supposing, students, the government tells the contractor that we will be giving you a subsidy of, say, rupees 50 lakhs if you construct the road in 4 years' time. In 4 years' time. Now, by the end of the 3 years, the contractor has constructed only 20% of the road. By the end of the 3 years, the contractor has constructed only how much percentage of the road? Only 20% of the road was constructed. Now, what do you have to say? Do we have a reasonable assurance for the things that he is going to complete it? And the answer is no. There is no reasonable assurance, students, in this case. And because that there is no reasonable assurance, students, what we are going to say that this particular amount cannot be recognized as an income for the contractor because there is no reasonable assurance that the conditions which is attached to the government grant will be met by the contractor, and that is the reason why it will not be recognized. So this is the example. However, students, supposedly if the government has given you 50 lakhs in the very first year itself, even though by the end of third year you have completed only 20%, but in the very first year they have given you 50 lakhs. So what will you recognize or will you not recognize? See the second bullet point, students. The second bullet point is recognition shall not, however, be postponed beyond the date of the actual receipt. What does it mean? It means that if you have got the money in your hand, then you just cannot postpone the recognition. It has to be recognized. It's mandatory. You just don't have any choice. Is that point clear to all of you? In which year you will recognize, students? In which year, in my example, in which year you will consider this as an income? First year itself. In the very first year, you will consider this as an income. I hope that all of you are clear with this one. Every one of you. So this is how things has to be looked upon. Now just read this third bullet point, students. Just read it once. You will understand and you will appreciate. I want you to read it quickly. Right, students? So this is a definition of income under section 2 clause 49. First, they have defined that this government grant will be considered as income. The government grant will be considered as income, students, in this context. Okay, so therefore this recognition was very critical in this regard, in this context. So section 278, first of all, that income that was being recognized, what they have said in section 278, they have recognized the year of receipt, year of charge. And what is the year of charge? The year of charge is if you have received the amount, then that will be the year of charge. When the government grant, which is in the nature of income, if you have received the amount, then that will be the year of charge. This section, if you remember, I taught you this section while I was teaching you ICDS 276. ICDS at that time 278 we have referred up for it. Treatment, students, I already have discussed with you. Students, I need not again repeat it. What is the treatment? If the subsidy which is recognized, if it is in respect of the depreciable asset, what are you going to do? Reduce it from the actual cost. And if it is for non-depreciable asset or for any other purpose, then what are you going to do, students? You are going to recognize this as the income, students. Recognize this as an income. I hope that all of you are clear with this one. Students, here, this is, I think, I need not tell you, you all are aware. Supposingly, if the subsidy has been given for more than one asset, like for example, you are setting up a factory and accordingly the SSC or the government is giving you the grant for the entire factory as a whole, which includes even the plant. So what are you going to do? You are going to do a pro rata analysis. You are going to do what? Pro rata, students. So if you see, students, over here, I have just given one example. I've just given one example on the pro rata particular part. Just have a look over here. Simple example. This is just a pro rata. In fact, this example has been given only for one time. Second time, you may not even go through that example. So if you just have a look where it is. Yeah. Just see, students, here. So this is a good example, by the way. Let's take a look at this one. Solar plant. By the way, students, before I proceed with this example, can you tell me what is the rate of depreciation? Quickly, for solar plant, I need an answer. Let me see how many of you are aware. Have you, if you have understood it, then definitely you should be now be in a position to answer it. Your attention, students, would be what I'm checking out right now. Solar panel. Quickly, students. Indeed, Muskan, rather perfect. If that is the case, Kanaya, okay, it is sometime low. I'll just take the mic ahead itself. Just confirm that thing, audio part, Muskan and Radha also. If there are certain issues, just let me know. I'm just taking the mic in front of me. Just confirm it. Okay. Okay, audio is clear. Now it should be clear, Kanaya. It will be, I'm quite near now to this. So very good, 40% is the rate. That is what you have told. This is one of the good example, students. Kanaya, just focus on this example, students. Be careful. Be careful. Now, students, by the way, I'll tell you, at the end of the class, I just would be giving you teaser. Now, first of all, I will tell you one thing, students, that see, we will be starting with the capital gains now. Now, from the next session, maybe 1 hour, probably in this case. But I would be doing practical questions with you of PGVP. Keep doing it while we will do CG. What we will do, students, at the end of the class, every 20 minutes, we'll keep solving the questions. So if you agree with this one, by the time CG happens, we would have solved many further questions. So till the time we are very much comfortable in terms of the practice. Apart from whatever the question that we are solving otherwise, I would want to solve more questions with all of you so that you have a firm grip on the entire content. For that, definitely, students, your participation is equally required and your revision and your energy level should also be there so that we should be in a position to practice more and more. Probably in this context, means the last 20 minutes of the session, maybe 9 to 9:20 or so, we can use that 20 minutes time and we can keep practicing questions. So we can, because now with this PGVP done, we can then plan for these question sessions separately in this context because now you have that particular thing that you know the scenario. That way, primary students, you will be through with all that particular things that is required on this particular head of income. Okay, so that will be that I will create those particular case study for all of you. Yeah, that is definitely, brother. I will definitely will practice is the ultimate thing which I am incorporating now for all of you, so that because PGPP was the main particular thing, unless you know the provision, we can't do this, isn't it? So whatever attempt that we have been making so far was to ensure that the build-up is done. So it's a slowly we are building up. Like we have done this questions of the employee related. We are building up with everything. Now with this actual cost getting done, you will see what will be the impact that will be done then thereafter. We will, like this will have the impact in the capital gains also, so on and so forth. You have the impact known, and the build-up would be through the practicals also. Now, students, have a look to this illustration number 2. Very good that you people have said correctly. It is 40% rate of depreciation. Let's have a look. Surya Fabricator Limited, an Indian company engaged in the manufacture of steel fabrications, pays tax under the normal provision of the Act. During the tax year 2026-27, it set up a captive solar power generating system at its factory. During the tax year 26-27, it set up a captive solar power generating system at its factory. The particulars are, and what is the particular students in this case? The cost of solar power generating system, the cost of solar power generating system, net of GST credit, whereof has been claimed and allowed. Means obviously, so net of GST credit, 80 lakhs. Erection, civil foundation and commissioning charges is how much? 5 lakhs. So 85 now. Capital subsidy from the state government sanctioned specifically against this solar at 20% of the plant cost. So this is the 20% of this 80 lakhs, which is 16 lakhs. Okay. The plant was purchased and installed on 10th of December 2026 and put to use on 18th of December 2026. There is no other asset in the relevant block computer depreciation allowance for tax year 26-27. So these type of questions you will not find in the main part, but you will find it in the form of either an adjustment or you will find in the form of an MCQ. This is what you get in question number 1 in the form of an adjustment. Okay, we have the liberty to put like a column table and all. In that, they will give a paragraph, 3 to 4 lines. This is actually an adjustment, or it will be an MCQ, one of the two. This is how they target in this case. Now you tell me, now many things are there. In this case, can you calculate that depreciation allowance, students? I give you 30 seconds time. Inform and just he is primary students. Just calculate it, because if I tell you something, then might be it will open up. I want your depreciation allowance answer, students. I give you 30 seconds for it. You should be in a position to answer it. You all should be in a position to answer it, students. 30 seconds. Let's see. Kanaya, Muskan, Radha, your answers awaited. All three have got it right. But cannot say whether you have got it right, but the answer is same. Let's see in that case, was it correct? So, Schultz, over here, if you see, so 80 lakhs, students. plus the erection, civil foundation, commissioning, 5 lakhs to be added. Cost will become how much to the SSC? Please see, students, are you noticing all these things or not? In this case, then the actual cost to the SSC, cost to the SSC, actual cost to the SSC, all this is how you have to put your language in your answers. So 85 lakhs, subsidies how much? 16 lakhs to be reduced, and therefore actual cost to the SSC is 69 lakhs. Now, as you got it right, asset is put to use for less than 180 days, 20%, and then students, in this context, this was a case of a manufacturer of steel fabrication, and please be careful. You have to give the additional depreciation, students. That is it. So you all were up till here, all good. But then that 6,90,000 of the additional depreciation, and that too not how much additional depreciation? Only 10%. The balance 10% will go in the next year. This you people have forgotten. Now you say, sir, why we have to do this? This is the magic of the questions that we solve, students. This is where the error gets found out. Otherwise, everyone knows the additional depreciation concept. Now, please understand, here the question was a bit silent. Now, please understand that if I'm an individual, that alternate tax regime becomes my default tax regime. Students, pay attention to what I'm saying now. If I'm an individual, HUF, AOP, BY, then the alternate tax regime becomes my default tax regime. And if the question is silent, then for that individual HUF or AOP, BY, that alternate tax regime, students, that alternate tax regime or the default tax regime, in that there is no question of additional depreciation. But when it comes to a company or say for example partnership firm, this is the twist of your question number 1. Then even if the question is silent, please understand, for them the alternate tax regime have to be opted. And if the question is silent, so you will say it is not a default for them that they are in alternate tax regime, unless the question explicitly says that they have opted for alternate tax regime. And then you will write an assumption stating that since the question does not say that they are in the alternate tax regime, we are accordingly solving this as per the normal provision. This assumption you have to write that the question is silent on that, and according to that. If this would have been the question on individual, HUF, AOP, BY, and the question is silent, then what you will say? Indeed, students. In that case, the game will change. In that, students, the game will change. I hope that all of you are now clear with this one. Everyone, no errors would be made on this particular part. So this is what it is, students. I hope that every one of you are clear with this one. So even this is an illustration covered from module. So some modules, some I have already made something on my side. Now see, this variant I have made, subsidy not directly relatable to the asset. Suppose instead the state government sanctioned a single capital subsidy of 16 lakhs, which 16 lakhs was given for industrial unit, not for a plant, students. It is for an industrial unit as a whole without earmarking it against any particular asset. So it's a general subsidy. So what ICDS 7 says? Proportionate. What will be the proportion? Now you will see. The total cost of all the assets with reference to which the subsidy was received is how much? 1 crore 70 lakhs, of which solar plant account for 85 lakhs. Solar plant account for 85 lakhs. Now, if you have to find out how much of the reduction of subsidy that will be done for solar plant, for that what you need to know then, how much is the subsidy which is attributable to solar plant and from the general subsidy. So therefore, the general subsidy is 16 lakhs. 85 lakhs is the cost of the solar plant divided by the total cost is 170. So attributable to solar plant is 8 lakhs. So actual cost of solar plant is 85 minus 8, 77 lakhs. And that exactly the point. So I hope this is quite simple, but since it was there, so you should know how the application should be done. So this is all about the reduction. So now remember how you will revise, quickly students, how you will revise actual cost minus 4 things. Which were 4 things? Primarily, if you can recall, the first one was in this context about the portion of the cost met directly or indirectly by any other person. That is first point. What about the second one, students? Over here, over there, the GST or the other taxes or the duties on which you have taken the credit, that will be reduced. The third one was that 10,000 amount that has been paid on a single day for purchase of an asset. Then in that case also the amount has to be reduced. Don't say disallowed. And the last one, students, is subsidy in relation to depreciable asset. That also has to be reduced. Subsidy for others recognized as income. What is a year of recognition? Year of recognition will be the year where there is a reasonable assurance that the conditions of the grant of subsidy will be met or the government grants will be met and it will be received. But if you receive the subsidy already, then as per section 278, read with ICDS 7, we will say that the year of receipt will be the year of recognition. We will then not see whether there is a reasonable assurance or not on the condition to be met. That will become irrelevant criteria. And the treatment of the subsidy in respect of depreciable asset reduce others income. Just keep it simple. This is how you revise it. Now come what is to be added. For added also, students, I have given you the list. I gave you the list now for what has to be added. Now, if you see, these are all students. If you see everything we have already discussed, we just have to go through it very fast. If you understood Challapalli, through Challapalli, students, see, you understand the principles. The through principles, everything will fall on its own. But if you do everything independently, see, the sequencing therefore is important. If you read this one concept and in that concept, if you read this 10 things together, so it will tally. But if you read them independently at separate places, then it becomes quite a difficult task. Then as if you are reading something else. No, it is relating to this only. So now comes the actual cost part, students. Be careful. Addition to actual cost. Items added to actual cost. Governing provision. Module page number 5. Tell me in this case, already we have done through the principle expenditure incurred to bring the asset to its present location and condition for its intended use. Examples are freight, transit insurance, loading, unloading, site preparation, foundation, erection, installation, professional fees, trial run. All are to be added. And not only that, students, by default, we also have considered ICDS 5. These are all covered. ICDS 5 is what? Below that, ICDS 5 is coming. And what ICDS 5 says that in respect of how do we do the valuation of tangible asset? How do we do the valuation of tangible asset? So in the valuation of tangible asset, these items has to be added till the date the asset is put to use. These items has to be added. Now you tell me, don't it resembles from Challapalli sugar mills only? Though Challapalli was specifically on the interest part, but all these are coming from the principle of Challapalli itself. So therefore, in that case, that is how it is. Second, borrowing cost. Interest for the period up to the date. The asset is for put to use. ICDS number 9 in this case. Now this part, friends, is an important one. Expenditure on repairs and renewals or renovation which is capital in nature. This has to be added back. When it is capital in nature, ICDS 5 gives you a test. So when it is capital, this is when the ICDS gives you the test. For 1 and 2, we don't have any issue. Because these are the expenditure which is linked with the process of bringing the asset into existence or putting it into its working condition. 1 and 2. Third one, question arises, there can be a normal repair or renewals. So when these repairs, renewals and renovation take the color of capital in nature, for that ICDS 5 gives you the test, and that test is what something is an important one. We'll discuss that. This part, students, this is a foreign currency fluctuation. This would be done in the next class. The foreign currency fluctuation 4243 and ICDS number 4243 and ICDS number 6. Now, students, come, let's take it further. Let's discuss this further one by one. First is 1 and 2, students. Do we require much of deliberation on 1 and 2? Already discussed through the principle of Challapalli sugar mills. I made you write also Challapalli sugar mills in the last lecture. I think you should be in the position now to write whenever the things comes in the examination, students. Please reproduce that principle of this landmark judgment. Okay. So all this expenditure, whenever it comes and whenever you have to add this expenditure, will you be in a position to bring down down or reproduce that reasoning in your answer. The explanations are important, students, along with the citation of ICDS or whatever it be. I think Challapalli name, you should always remember it. Challapalli Sugar Mills Limited, Supreme Court. And respective ICDS, ICDS 5, ICDS 9, so on and so forth. Those are the respective ICDS. Now we have a specific ICDS to that effect. So come to this repair, this is the only new thing. When repair, renewal or renovation will be capital in nature, this is what we need to remember now, students. See, I don't know, if you recall through principles, half of your job is done. Then you know that I need to remember only this. And this is where your focus has to be. The other day, Kanaya was telling you that day that how you manage the things, what to do and how much to do. What to do is the real game at the end of the day. So I need to know that I need not revise all these things. Once principle is known to me, I can crack it. But yes, these are the areas that I need to be very much, I need to be careful about it. Just have a look, friends, over here. See, the term repair includes renewal, renovation of an asset, but not its replacement. Because if you replace the asset, by default, it's a capital in nature. There is no thrill about it. We are here right now, friends. We are here for what purpose? To know when a repair, renewal, or renovation will be considered as capital in nature. When it will be considered as capital in nature, friends, and this is what is the most important test. And what does ICDS 5 say? This is what you need to remember, friends. ICDS 5 says the test under ICDS 5 is that expenditure which increases the future benefit from the existing expenditure which increases the future benefit from the existing asset beyond its previously assessed standard of performance. Three things. Expenditure which increases the future benefit from what? From existing asset. What is the parameter? What is the parameter of increase in the future benefit? How do we assess that the future benefit has increased? So that parameter is if the benefit has increased beyond its previously assessed standard of performance. So say for example, the performance was say 1000 cc. It increased to 1200. So the capacity, if you have increased in this context, 1000 to 1200. So if this particular criteria gets satisfied, then in that situation, yes, in this case, we can say that there is an enhancement or increase in their performances or increase in their standard of performance, and accordingly it will be there. Take for a building, students. Now be careful for the building. A building has a life of 10 years. You are in the 9th year. And in the 9th year, this building looks something very shaky, like any day it will come down. And then you are not doing replacement, you are doing a full-fledged repair and renovation of that building. Now you tell me that building which was about to collapse, by doing a repair and renovation, did you increase its future benefit? Yes. Beyond its previously assessed standard of performance? Yes. Why? Previously, it was meant for 10 years. Now, by doing this repair and renovation, you have increased its life for another 20 years. So, whether this repair and renovation expenditure on your factory building or on your business premises, can that be considered as a case of an expenditure which is capital in nature? Yes. If it is capital in nature, will you capitalize in the block? Answer is yes. Is that point clear to all of you students? Every one of you? And that exactly is the point. Now, if the question, students, is silent, if it only says repair expenditure is this much, or repair in this case is this much, then you will have to take an assumption that we are assuming that if you have to assume this way or that way. My take is that read the question very carefully, students. What they are trying to convey. Sometimes the facts convey the message. They need not tell that it is capital nature. The facts has to be seen in such a way that the life was this much and the increase of economic life has increased of that particular asset. So those things are clear. But if the question is very dead plain, says repair and renewals, nothing else. then that time assumption students is must. And please have the habit of writing these assumptions when the question is open-ended. And that's the time when you have to write the assumption, because this is a habit that you should inculcate in final CA. You will find in the question paper at the top, you need to write the assumption, and assumption carries the marks. If you don't write the assumption and just straight away solve the solution, you will find the instruction that then your that particular adjustment, even though it may be right, but the fact that you have not given the assumption, it may not be assessed. Students, you have to be very careful on that part. Okay. So I hope that this thing is done. Coming to ICDS 9 students now. ICDS 9. What is ICDS 9? On borrowing cost. Now just see students here why we are here in ICDS 9. This we need not be, because Challapalli already we did. Here we are there because ICDS 9 scope is a bit larger scope. It not only covers students, pay attention students, it not only covers the asset, it also covers the inventory. Say for example, you have taken the loan for inventory, then whether the interest will that be capitalized or not. Can you tell me the valuation of inventory? Can you tell me the valuation of inventory? How do you do the valuation of inventory? Indeed, students. Indeed. Perfect. Cost or NRV, whichever is less. Cost or NRV, whichever is less. So again here the cost is involved. Again here from the cost is involved, isn't it? And because that the cost is involved, therefore the interest, whether that interest will that be students, the interest expenditure will that be added to the cost of inventory or not, as per ICDS 9 is what needs to be decided. As per ICDS 9 is what needs to be decided. So this is the relevance of ICDS 9, because therefore the scope is bit large. But don't worry, it is as per Challapalli Sugar Mills Limited only. Let's come to this ICDS 9 students. All of you. See here students. So first of all, ICDS 9 deals with the treatment of borrowing cost. It does not deal with the actual or imputed cost of owner equity preferential capital. Obviously, here we are here for assets, not for deciding the cost of equity or cost of preference capital. These things are outside the scope. Borrowing cost students, directly attributable. The borrowing cost directly attributable to the acquisition, construction, or production of qualifying asset. That's the reason why they use the term qualifying asset in this case instead of depreciable asset. Why? Because obviously they are also have to cover inventory as well. So therefore they are using the word qualifying asset, are capitalized as a part of cost of that asset. All other borrowing costs are recognized in accordance with the provision of the act. Like if they are attributable to what? Acquisition, construction, production of the qualifying asset. So if you are acquiring, constructing or producing the qualifying asset, then that borrowing cost attributable to this will be capitalized. So interest, if it is loan attributable to acquisition or construction or purchase of the asset, then the borrowing cost associated to that loan, will that be capitalized? Answer is yes. Remaining borrowing costs, like for example, I have taken loan to pay the salary of my employees. Then the interest on that loan, what will happen? Capitalized or allowed as deduction? Allowed as deduction. So that is what they are trying to say in accordance with the other provision. So that is what they are trying to suggest to you in this regard. Now, students, please come to this particular part, all of you. Therefore, what becomes very important and critical over here is to understand what is the meaning of the term qualifying asset. I told you, qualifying asset, it covers both tangible, intangible, as well as the inventory. And please understand, tangible asset, land is also there. Huh? Building, machinery, plant or furniture. So any loan associated with land, interest on that particular loan will go to the land. Land is non-depreciable, so we don't care. That interest, any case, will be sunk. It will not enter through the route of depreciation because it belongs to land. Intangible assets, all that what we discuss in the depreciable asset also. Inventory, students, inventory. Inventories are, be careful. When an inventory or a stock can be considered as a qualifying asset, the law says inventory that require a period of 12 months or more to bring them to a saleable condition. Many industry say in that case, here in the wine industry, so the wine industry or any other particular industry where the gestation period is 12 months or more to bring them to saleable condition. To bring them to saleable condition, all that will be considered as qualifying asset. Other than that, it is not considered to be a qualifying asset. Other than that, it is not to be considered to be a qualifying asset. Now, see here what they have written. A distinction is to be noted here. In the case of specific borrowings, the tangible and intangible assets referred above are qualifying assets without any requirement as to the period of 12 months. So, for assets, tangible or intangible, whether the 12 months criteria is there, no. But when it comes to inventory, to be considered as a qualifying asset, the inventory's gestation period should be 12 months or more to bring them to the saleable condition. Only then it would be a qualifying asset, students. Now, students, just very quickly, this entire ICDS gets through with this particular tabular form. So, what I have done, technical students, is broken down the ICDS so that you are out. Because why I have done this, I have taken the liberty. We understood the Challapalli sugar mills judgment, and now what we can do instead is that we can take the liberty of splitting the ICDS through a lot of examples and through situations. Now, through examples and through situation, we should now be in a position to answer it, and that situation is what you will get in the exam. They don't ask you ICDS per se, like discuss ICDS 7. That kind of question is not there. But they will ask a situation in that ICDS and they will put this as a form of an adjustment. Adjustment saying total income question or some other questions. Or maybe in MCQ. You never know. So it's a situation which is important. And therefore we have just broken down the entire thing so that it serves both the purpose. One, your understanding. Second, the examination. Specific borrowing for a qualifying asset for the period up to the date the asset is first put to you, students. Whether you will capitalize it or not. Specific borrowing for a qualifying asset for a period up to the date the asset is first put to use. Whether you will capitalize or not, answer is yes. Even without looking into this one, students, you should be in a position to answer it. Isn't it? ICDS 9 and the capitalization part 32B. General borrowing or Challapalli sugar mills is always there because everyone has taken the inspiration from Challapalli. General borrowing used for an asset that necessarily requires 12 months or more to acquire, construct or produce. Students, here they are talking about general borrowing. Now, specific borrowing means to a targeted asset. General borrowing, just like a subsidy, it was not for a particular asset. It was for the plant as a whole. Same loan also you could have taken. Na? I want to construct the entire factory, including the plant. So when you are taking a general loan, which is associated with more than one asset, and for which you will have to prepare more than one block, in that case, whether you will go on a pro rata basis, and the answer is the same particular thing that we discussed in subsidy. General borrowing used for an asset requiring less than 12 months rooms. In this case, just a second. Where is that provision? I just was wondering where the provision is gone. So the situation is compassed and provision has seen is going period. Students, Just have a look. Just have a look. We have just read, I think I just have, that's why I was wondering where that provision went. Please have a look from sorry. Read it now very carefully. Now I think you should get hold with this particular part. All of you. Read for inventory and for general borrowing very carefully. Okay, Shruti? So if the general borrowing has been taken, students, this is where the ICDS 9, ICDS 9, you need to be careful about this application. ICDS 9, so far as the general borrowing is concerned, students, they regulate the capitalization only if the asset is meant for construction, that like factory building is constructed, plant is constructed, turnkey projects, and then you would have taken a general borrowing for it. And therefore, like for example, a big loan in this context. Why when do you take a general borrowing, students? You will say, sir, but why they are so much this thing? Understand one thing. A specific borrowing or something that I have to purchase an asset right now. And I don't have money. I will go to the bank and then I will put up the purpose for the with the bank that this is the purpose for which I want to take up this thing. Bank will sanction the loan. On the basis of the loan, then I will purchase the asset. That is the general, that is the specific thing. General borrowing is primarily when you don't know how much amount for which asset. Now are you getting this one? This happens when you actually construct an industrial plant. And the industrial plant, primarily because there are 20, 30 assets, say for example, 20, 30 different kind of asset that has to be constructed in that plant. So you have taken what? A general borrowing. And then full construction of the plant or full acquisition of the entire set of asset will take its own time. Many of the parts of the plant may have to be imported, then they have to be put across, then they need to be fabricated, they need to be installed in the factory, then the trial run, and then once we convince that the installation or the commissioning of the plant has been done in the condition which it is meant to be, then we start put to use in that context. So if that period for a general borrowing is 12 months or more in that situation, then only in that situation the interest on such general borrowing would be capitalized. And this is what they say, which what they're trying to imagine or visualize is that this is large construction scale for which you don't know at the start how much amount will be required for which particular plant. And the process would be long, and only when the process is 12 months or above that the interest on such particular loan will be required to be capitalized. This is precisely the requirement of the capitalization. So just be careful when you talk about general borrowing. There is a visualization that has been done in this context, and this is the reason why if you now students come to this situation, all of you, general borrowing used for an asset requiring less than 12 months. Will it be capitalized? No, fails the 12 months limit of definition. Inventory requiring less than 12 months to bring to the saleable condition. Capitalization? No. Same is also inventory. We don't see general specific inventory, which is for less than gestation period of the inventory itself is not more than 12 months, 12 months or more for bringing it into a saleable condition. In that case, no capitalization required. Interest relatable to any period after the asset is first put to use. After the asset is first put to use, Challapalli, already the case study I taught you. Interest number 2, if you remember that, what it would be Will it be capitalized? No. In that case, will it be allowed as deduction? Yes. Borrowing for working capital, for paying off a trading debt, or for general business purpose. Obviously, these are working capital. So, where is the question of? Although it is a borrowing cost, but this borrowing cost is not in relation to qualifying asset. And because it is not in relation to qualifying asset, therefore the question of capitalization will not arise. That portion of borrowing cost which is disallowed under a specific provision of this is, students, question number in the module. This is your question number 20. CBDT FAQ. These are all CBDT FAQs only, which we have. So the situation has been given by the CBDT and we have created like this. That portion of borrowing cost which is disallowed under a specific provision of the act, like for example, students, the TDS primary, or I have here in students, the TDS was not deducted, or excess payment in a related party transaction. Excess, I have taken the loan from my associated or my related party, and I am paying the interest, say for example, at 14%, whereas the rate of interest is at 12%. I have taken the loan from my related party, and the loan has been taken at what rate? 14%. And what is the market rate going on? 12%. So question therefore is that in this case, that excess 2% is otherwise disallowed. So whether that capitalization of borrowing cost on the qualifying asset will be on 12% or 14%, what they are saying it is at 12%. What they are saying it as 12%, students. I hope that every one of you are clear with this one. Okay, that is exactly the point. Students, we'll deal with this question first on the borrowing cost, and then in that regard, we'll then come to this. But before this question, students, this is a very important one. Commencement and cessation of the capitalization. So from which date to which date you are going to calculate your borrowing cost? From which date to which date you are going to calculate a borrowing cost? This is what they're trying to suggest in this case. From which date to which date you are going to consider for calculating the borrowing cost is what is given to you over here. So please have a look over here, students, all of you. So commencement and cessation of capitalization, types of borrowing, specific borrowing. So means one-on-one, I have taken the loan only to purchase this plant, specific borrowing. From the date on which the funds was borrowed, so from which date? From the date when the funds were borrowed, until which date, students? Till the date, students, the asset is first put to use for the asset other than inventory. Till the date the asset is first put to use. So fund borrowing date till asset use date. This is the case. And as far as the inventory is concerned, if it is specific borrowing for the inventory, then from the fund borrowing date till the date when the inventory are substantially, all the activity necessary to prepare it for its intended sale are complete. Whatever is required in terms of the activities to make it prepare for its intended sale, all those what is required is now complete. So this would be the date of capitalization. Up till that is the date of capitalization. And if it is a general borrowing, so be careful, see the difference of the language. From the first one was from the fund borrowing date, the second one was when the fund was utilized. See the difference. The question is there, students, don't worry. How to apply this? I've drafted the question so that you can apply this thing perfectly. So you know the application as well. So all the Q&A students are being attached to the relevant particular part itself. So that we should there itself. Let's have a look. Apportionment of interest with reference to the date of put to use. Meridian Polymers Limited borrowed 1 lakh, 1 crore on 1st of June 2026 at 12% per annum, specifically, so underline the word specifically to acquire and install a new molding machine. Specifically to acquire and install a new molding machine. The machine was purchased on 1st of August 2026. for rupees 1 crore and was installed and put to use, students, on 1st of December 2026. It falls in the block of plant and machinery, which has no opening balance. The company is engaged in the manufacture and pays tax under the normal provision. Interest was paid full up to 31st March 2027. Compute the actual cost, depreciation allowance, and interest deduction therein. Uh, we'll do it together. Otherwise, I would have given you. Or else, friends, can you just do this one? Or else, let's students do it together, because then it might take some time. So we'll have to cover up some more questions. So let's do it together so that I can cover more questions also. So students, over here, if you see what has happened in this context, it is a specific loan taken. Yes. Is the loan taken for, if it is a specific loan, is it for inventory or it is for the actual, is it for inventory or is it for the asset? It is for the asset. Now, if it is for the asset, then we don't have to see that 12 months period in that context, because the loan is specific. Because the loan is specific, so that 12 months period of the acquisition or the construction period is not to be seen. Now, if that is the case, you just have a look. 12% per annum. Students, now the capitalization of the borrowing cost that we are supposed to do, the capitalization of the borrowing cost that we are supposed to do would be from the date of borrowing till the date of asset put to use, not from the date when the fund was used, but from the date of borrowing. And please see, what is the date of borrowing? 1st of June. When the asset was used, the machine was purchased. When the money was used, the machine was purchased on 1st of August. This was the date when the money was used. Supposingly, instead of being specific, if this would have been general, then instead of 1st June, we would have gone with 1st August. If instead of being specific, if this would have been a general particular loan, then instead of 1st June, we would have then considered 1st August. But for general, subject to that 12 months threshold period. Anyway, we will take 1st June. And when it was put to use, 1st of December. So the capitalization would be from 1st of June to 1st of December, and that exactly is the point. Means 30th of this thing. So in this case, 6 months is this period. When here interest was paid in full up to 31st of March. Interest was paid, students, loan was not paid. So therefore, in that case, up to 6 lakhs would be added. Now, from 1st of December to 31st of March, means after the asset is put to use, that period of 4 months, it will be allowed as deduction. So now, can you tell me the actual cost from 6 lakhs? Add to this, 6 lakhs will be added to what? To 1 crore. In this case, to 1 crore. So 6 lakhs will be added to 1 crore. That is the actual cost. And what is the depreciation amount? Students, be careful. The depreciation amount will be reduced to 50%. And since he is in the normal course, whether he will be eligible for, will he be eligible for the additional depreciation? Yes, because it is a case of a manufacturing concern. So all these are the small points that you should just note. Actual cost is 1 crore 6 lakhs. And then in that situation, depreciation would be 50% of, what is the normal rate of depreciation? 15%. That is the general rate. So therefore 7.5% is the rate of depreciation. So therefore 7.5% on 1 crore 6 lakhs, 7 lakh 95,000, additional depreciation 10% it would be, which is 10 lakh 60,000. Total depreciation would be 18 lakh 55,000. And then interest allowed as deduction is this much. I hope that this point is well taken by all of you. Every one of you students. This students foreign exchange fluctuation, we will be discussing it, not this one next class. Towards the end, I'll be discussing it with you forex. So I don't want to mix up this forex at this point of time. This is an independent and very important area. Although it can come and may not come, that's a different thing, but this is a very important area, that is for sure. Now, students, actual cost in the special situation. In this case, just students, remember there was a table altogether. Students, there was a table altogether. Remember all of you? And many of you used to leave that table. Actual cost, there was a huge table that was there in that context. Have you, many So many students were not that comfortable with this. My entire point to all of you, or short point to all of you, is that students try to remember the principle behind it. If you can remember the principle behind it, your load becomes easier. So what I've given is that the first I've put across the principle behind the entire table. See the list. Here now, if you see the list, you just now what you do, you don't have to by heart it. See, the technique of study is like this. Of DTA here. Now, once you know the principle, you only have the principle and then just read 2 or 3 times. That is it. You don't have to even by heart it. You know, you'll start attaching every particular provision with the associated principle, and that is how you'll remember it. The way Challapalli is helping us to now remember many things, whether it is in ICDS 5 fixed asset, whether it is in ICDS 9 in that context. All those are something which is derived from that. ICDS 5 fixed asset, ICDS 9 borrowing cost. By the way, what was ICDS 10? Let us see how much ICDS debt we have already have covered. ICDS 10 is in respect of what? Indeed, students, contingent liability. It was already targeted in the first class. Then what about ICDS 8? ICDS 8 was in respect of the securities, the category-wise valuation, category-wise aggregate of cost, and the category-wise aggregate of NRV. That will be compared, lower of the two. How about ICDS number 6? Primary ICDS number 6, students, in this regard. What exactly it is? Indeed, that is something which is in respect of the foreign exchange fluctuation that we will see later. ICDS 7 was about the government grants in this context. ICDS number 4, students, is revenue recognition. Remember dividend and interest, something we have discussed, we have spoken about it. This particular part, revenue recognition, is ICDS number 4. I would request to all of you students that because you just read ICDS 4 now and tell me up till now, whatever you have discussed, students, if you can relate with ICDS number 4, whatever we have discussed about up till now. If you can understand ICDS number 4 based on the principle of recognitions and all, you have already have cracked a lot of grounds in this context. ICDS 1, students, remember ICDS 1? Prudence, materiality, we don't care. Unless what? Unless there is any specific particular ICDS or section which recognizes prudence and materiality. Then that's a different thing. And that recognition, students, it is also there in the foreign exchange ICDS that I have told you, which we will discuss in the next class. Now, students, coming back to this one, see this entire list, actual cost. See, can you see this list? Under this circumstances, what is the actual cost? Under this circumstances, what is the actual cost? Under this circumstances, what is the actual cost? Earlier it was section 43 subsection 1. Okay, earlier it was section 43 subsection 1. Now it is 39 subsection 4. This is all the module page numbers. I don't have to remember it. See how to read this table. This is the principle from that you should bear it in mind. Continuity when the transfer is not taxed. Remember this part, at least this much part you remember, student, or at least you know. Like for example, you people have done in inter-CAF, in this case, cost to the previous owner. You would have done that. When the previous transaction of transfer was not taxable, like father to son, through gift, will, succession, inheritance, and capital gains, you would have learnt it. If that transaction was not taxable, then the question that arose was what would be the cost in the hands of the son or the successor? What would be the cost in the hands or the successor? Then we used to say cost to the previous owner. What is the principle behind that? The continuity is the principle where the transfer is not taxed. So what was the cost in the hands of the father? Same is the cost in the hands of the son. The continuity principle. And that exactly is the point. Second is, students, stripping out what has already been used. Understand what has already been used or already has been allowed. There are two things. Stripping out means reducing the cost. For what reason? Why you are reducing the cost? because that asset has already been used, means it's an old asset, or for which you already have got a deduction. Any example, students, that you can give? Let me check out whether you can give any example. Now start relating. You will find 2-3 entries of this nature. Any particular example that you can think of it. Let me check if you can. Any example, students? Second machine. Okay. That is an old machine. Kanhaiya, gift in the case of relative. Yeah, that is also the case. Yes. Or may I also put up, students? Supposedly you have got full deduction in some section. Students, you have got a full deduction in some section. Like remember old section 35, you may have taken full deduction. Or 35 AD, old section, remember? Where you get full deduction of the capital expenditure. And if you have taken a full deduction of an expenditure or a capital expenditure, and then that asset is now brought for use for business, tell me one thing now, what will happen? In that case, the cost would be nil in this example. Are you getting this one? So stripping out what has been already been used, old asset, or already has been allowed. And the last one is a ceiling where the cost could be inflated. So there are some situations where they have identified a potential where the assessee can try to inflate his cost. So to check that particular situation, that they have put up a ceiling that only this much is the actual cost. Wherever they see a potential of what? Tax avoidance. Wherever they see a potential of tax avoidance, they will put a ceiling on that. And this is what we'll consider as actual cost. This is what how the things are there. And I have prepared this table truths based on this particular thing only. Can you see this one? Specified circumstances, actual cost to the SSC, and why it is so, and the point to watch. So this is something I have covered over here, so that at least the logic which has been there is already over here. So that now you can easily remember. Now, just I think students, you can take this as a homework also. But I will just try to deal with some typical case. See, like for example, what happens? Amalgamation. Are you aware of amalgamation part, students? Amalgamating company is what is doing? It is transferring the asset to the amalgamated company. You will learn in capital gains chapter that these amalgamations are not considered as taxable transfer. These amalgamation, students, are not considered as taxable transfer, and therefore the amalgamating company which has transferred the asset is exempt. Just like your father to son gift will example, father was exempt under capital gains. Same as the amalgamating company. So now the amalgamated company has got the asset received in the amalgamation. What is the cost in the hands of the amalgamated company? Cost of the asset in the hands of the amalgamating company. That exactly is the point in this context. So you will find, students, over here this particular way, and this is how the things are. Now over here, students, only couple of points I just want you to be careful about it. Just have a look to point number 5. Point number 5, students. A building being the property of the SSC is put to use for business or profession during the tax year. Means it was a property of the SSC. Now I want to use it for the purpose of my business. Means it's like an old building, students. In this case, which was now it is for business, means earlier it was for private purpose. Now it is for business. Na? Is put to use for business in the tax year. So earlier earlier it was for private purpose, and therefore now what will be the actual cost? See the logic. Actual cost of the building minus the depreciation, which is that would be allowable had it been used for business. So notional depreciation, if supposedly you would have claimed the depreciation right from day one as if you were using it for your business, then what would have been the depreciation reduction that would have taken place till now, till date? That reduction we will do in this case. And at what rate we will reduce the depreciation? Calculated at the rate in force on the date in which it was put to you. So at this rate, we are going to reduce this depreciation allowance. That is what they are trying to suggest in this case. Now, one more particular part, students, over here in this particular context, which I just wanted to discuss. Rest, I have already given the explanation, students, on the right hand side, so you don't have to worry on this one. This is a notorious case, students. This was once asked by in the examination. Point number 8. Asset acquired from a previous owner and subsequently given back to him by way of lease, hire, or otherwise, where the previous owner had used it for business and had claimed depreciation. Please pay attention. I'll give an example. You will understand this. This is a typical one. The rest of it, probably that's it. The rest of it you will easily manage because the examples are given. But this also I have told you, but I'll give an example itself. Students, supposingly A Limited, I'm A Limited, you are B Limited. Now, you want to claim in your books some deduction, okay, and want to reduce your profit. Accordingly, you are entering with an arrangement with me where you are asking me that do one thing, you sell me your plant at a very higher rate. I tell that, but look, I want to continue my production with this plant. If I give it to you, then what will happen in that case? I will have to unnecessarily buy a new plant. I don't have the money. So what you are saying that don't worry, you sell me this particular plant at a rate which is a higher amount. And then you take back that particular plant from me. And then what you do, that you take back the plant from me as a hire or for lease purpose. Now the WDV in my books, students, already of this plant is only 3 lakhs. And you are telling me that I should sell you for 30 lakhs. I am obliged. And both of us say maybe a related party or whatever. There is some sort of a connection. On the basis of which, say 3 lakhs of WDV in my books, the plant is transferred to you at 30 lakhs. So now you say that it's our actual cost of 30 lakhs. Now that asset comes back to me. That asset, students, comes back to me. Do you agree? That asset comes back to me, students, because on higher basis, I am taking it back. So therefore, my business operation doesn't suffer. And you now gain because now you say your actual cost is 30 lakhs. And on 30 lakhs, you will claim depreciation. So on your books, it will be higher. So this is where you will be targeted. See now, read this one. This is known as, this situation is popularly known as sale and leaseback. So in your hands, students, now in your hands, the cost that will be compared with the two amount. And what is the two amount, students, in this case? That the amount that you have purchased or the WDV in my books, whichever is lower. So obviously in my example, the WDV is 3 lakhs, 3 versus 30, answer is 3. And this is what, students, it is in this context. So students, this is precisely the point which has been there. So this is a case of a sale and leaseback. This is what happens. Okay, now students, if you see point number 9, over here, this is also sometimes very much asked. I told you already, if already 100% deduction has been claimed, students, then what happens? In this case, entire cost has already been allowed as deduction and therefore nothing is left to depreciate. This is what it is. Same case, students, you will just, I have given everything. In the 3 principles already told to you. Students, the 3 principles already told to you. And after that 3 principles, the logic has been mentioned. Students, now I tell you that you can easily go through the same. any point of time, now I think Monday, I think this notes will be delivered to you. Please ensure to go through this one. And whenever you get some, even though you get some queries also, it should not be because the reasons are so specifically told. You remember only 3 students, you remember everything. Other than that, students, what else that in this table, merit and attention, right now, interest part I have already have considered. Yes. Now, students, if you see over here, just a second. See here, section 39.5 and 39.6. Determination of actual cost by the assessing officer. See here, where the asset was used by other person for the purpose of his business before the assessee acquired it, the assessing officer is satisfied that main purpose of transfer, directly or indirectly, was to reduce. Students, underline the word main purpose of transfer. This kind of language you are going to find it in a topic known as General Anti-Avoidance Rule, the GAR chapter, this kind of a language. Main purpose of transfer, directly or indirectly, was to reduce the tax liability by claiming depreciation with reference to an enhanced cost. The actual cost shall be such amount as the AO determines, having regard to the all circumstances of the case. So what exactly they are trying to say? I give again an example. Now I am a subsidiary company, you are a holding company. In my books it is say 10 lakh rupees. I am selling this asset to you at 1 crore. Both of us anyways are related to each other. So therefore in my books I am showing that 1 crore. What happens? You will be, as a holding company, now you will claim depreciation on 1 crore. That becomes your cost. Assessing officer knows that these people, they are just helping each other. The main purpose is what? To reduce the tax liability by claiming a higher depreciation. So does the AO has the power in this case of 39.5 or 39.6 to take, in your case, your holding company, in your case, the WDV in my books? Answer is yes. This is very much giving the AO the widest power that if I feel something, I just need to prove or establish that the main purpose is what? Is to transfer this particular asset. The main purpose of transfer of this particular asset is for reducing the tax liability. If this AO can establish, students, what happens? This gives the widest power that my WDV will become your actual cost. So this is what it is. This is the widest section, students. Now it's a summary, students, summary of the topic. Cost and price, students, just have a look. Cost and price, cost distinction, whether price and the cost is the same. Answer is no in this case. And then we have seen this principle of Challapalli Sugar Mills Limited. In that context, date of put to use till that point of time, whatever is the expenditure that you have incurred, that in relation to bringing the asset into existence or putting it into its working condition, that expenditure will be capitalized. Treatment in the books, the word whether capitalized in the books of accounts or not, make it clear that entry pass in the books does not alter the tax treatment. So whether you will know whatever has been done in the books, does it matters to you? No, because actual cost, students, is not a treatment of books. Actual cost is a treatment as per the principle. What is the principle? Any expenditure which is linked with the process of bringing the asset into existence and putting it into its working condition, those expenditure will be capitalized. That is the principle. What you have done the treatment in the books of accounts, we don't care. Any case we know net profit as per the books and the specific adjustment, and we are doing the specific adjustments, isn't it? Reduction, students, I already told you which are the reduction. All these reductions are there, students. This reduction, there are specific reductions, and then there are what, students? For subsidy also, this is a summary, student, subsidy. So this is a list of reduction, students, that I have told you. Then for subsidy, students, where relatable to asset, it is reduced from the actual cost or from WDV. And if it is not relatable to the depreciable asset, to be specific, it should be depreciable asset. If it is not relatable to a depreciable asset, then it is, if it is relatable to the asset, depreciable asset, then reduction from the WDV. It is not an income, students, be careful. But in this case, where it is not relatable to a particular asset, it is general subsidy for more than one asset, pro rata. And the third one, students, is that if it is neither in step 1, step 2, then you are going to reduce it. Students. And that exactly the point. Then borrowing cost, students, the same thing. Borrowing cost also should same thing. Repairs, students, repairs. This part, students, 42, 43 and ICDS, this part, this 4 part, students, is what I'm going to do it in the next class. This 4 part, I'm going to do it in the next class. 13 situation, 39.4, 13 situation where cost is what? A prescribed figure. Cost. And for that, I told you 3 principles. I told you already, students, 3 principles. Based on that, every particular 13 situation was given and the assessing officer having a widest power. So with that, students, we're done with this particular part. And now, after the break, students, quickly, WDV, something is what is required to be done. Primary, and that primary would cover up. There's only few things in this particular part that you need to know about it, and we will be done with this. And then, students, I will leave you with one particular this thing also, one important teaser for all of you. Just tell me any query, students, that you have up till now. Any query, students? Just let me know quickly before you hit the break. Radha, say quickly. Any query, students, now?
Yes, sir. Radha this side.
Yeah, Radha, please say.
Yeah, there are specific only 5 of the queries which I had. So, with regards to the portion of cost which is borne by holding company by subsidiary, with regards to purchasing of the asset you were telling now, so I was unclear about it. With regards to actual cost itself.
The last one about the assessing officer exercising the power,
No,
that particular
not the last one. During the starting of the
initial.
session itself. Yeah.
That was a portion of the cost which is met by some other person, isn't it? That particular.
Correct. That
So
one.
therefore, I just meant that, say for example, the purchase price of the plant is say of rupees 1 crore. Okay. This is subsidiary company which is purchasing the plant. And as per what the arrangement, holding company, knowing the fact that the subsidiary does not have a capacity, it says that 20% of your 1 CR, I am going to bear it. Means, as per this, they are giving the check to the vendor, 20 lakhs. So in that case, although the price of the asset was 1 crore, but the fact that holding company on behalf of subsidiary company is bearing rupees to 20 lakhs, which is 20% of the total value. Therefore, how that the net cost, which is borne finally by the subsidiary company, is how much? 18 lakhs.
Correct. So that would be ultimately reduced because holding company is bearing it. As simple as that.
Perfect.
Okay. The second one was with regards to the Mahindra and Mahindra judgment. What was it?
The
Like it
judgment
was
was the same thing. Loan was being taken, and thereafter the loan was used for acquiring the asset. Okay.
hmm,
The waiver has been given on the loan subsequently by the bank.
hmm,
Now, what happened was that obviously we have concluded that this waiver cannot be reduced from the actual cost. And the reason we told that for reduction in the actual cost, you require that tripartite wala thing. So this was
yes,
not in that range of tripartite. So it was the same case of a loan taken and
yes,
you have purchased an asset. Subsequently,
yes,
loan was being waived. So therefore,
yes,
there was no reduction from the cost. That is point number 1. That is clear. The second,
yes,
this point which actually happened was whether the loan can that be taxable as income.
yes,
This was the main consideration. This was the main particular argument. So in that judgment, Mahindra and Mahindra, it was held that if you see that chargeability of section 26
hmm,
earlier before the amendment, means when Mahindra and Mahindra was in that 2018 judgment, what happened was that in that before the amendment, the law was only the benefit arising from the business, which is which is equal, which is in respect of the money is worth, meaning there were in kind. In a simple word, any benefit in kind was taxable.
yes,
Benefit in money was not taxable earlier.
correct,
So what happened was that Supreme Court in that case held that what is charged is benefit in kind, benefit arising from business in kind is what is charged, benefit in money is not charged, and therefore it is not taxable.
Okay,
Then
that's why the amendment was being brought in the
that's what
next
the amendment, exactly. Then the amendment happened, and the amendment now includes even benefit in money as well in that.
monetary or partly in cash or in kind. Okay, that
Yeah,
was the thing.
perfect, perfect.
And the next one, sir, with regards to the subsidy for the depreciable asset, you were saying now the other case income is there. So what case you were targeting to specifically for
In
with regards to subsidy? You were
the
explaining about the
other, one is
yes,
the subsidy which is specifically in relation to a depreciable asset.
correct.
So if it is in relation
Yes,
to depreciable asset, the law itself is clear to say that it is to be reduced from the actual cost.
yes,
In
yes.
fact, the definition of income itself does
Hmm.
not recognize the government grants. The government grants which are in relation to the depreciable asset, the law does not recognize this to be an income.
Hmm.
The law says that government grants or subsidy will be an income other than for depreciable asset. Meaning thereby, other than for depreciable asset, if you have got any government grants or
Hmm.
you may say subsidy, then and only then it is a income. So the
Okay.
concept of income, so far as government grant is concerned, is associated with anything other than depreciable asset. So you have to check whether the grant is for depreciable asset. If yes, then reduce it from the actual cost.
Right.
If
Yes.
it is not for depreciable asset, if it is for any other thing, like I told you, like for example, sometimes the government grants are given for or subsidies are given for electricity subsidy, VAT
Yes.
subsidy, power
Yes.
subsidy, land
Correct.
subsidies. So all
Yes.
these subsidies now, which are nothing to do with depreciable asset, all these
Right.
subsidies now will be considered as income.
Okay, it is a very open-ended thing which the government has,
Yes, yes.
like
Because
is
there
there.
were plethora
Yes,
of
yes, yes.
case laws earlier which used to compare earlier whether the subsidy is capital or not.
Correct.
There were too many case laws on this particular matter. And now they have made it simple. Once this ICDS was introduced, along with the section definition of income, they made it
Yes,
clear
yes.
that now only one subsidy would be considered for reduction of
Uh,
reduction to determine
in
the actual
actual cost. Yes,
cost.
yes. In actual cost, that is with just simply just if it is for depreciable asset, then straight away reduce it.
Reduce
Other
it.
than it, please treat it as income and chargeable to tax. That's
Perfect.
it.
Perfect.
And okay, sir. Just I wanted to know last one with regards to the assumption you were discussing of additional depreciation. One of the question, right, of the steel fabricators company. So you were saying now you need to put a specific assumption note. So I was unclear about it. That
No, you
whether
have
it's
to note because in the question they have not said anything about whether the SSE has
yes,
taken the alternate tax regime or not.
yes, yes.
Question never said you that whether this. There was another question, I think just recent question that we did, where it was written
Yes.
that the SSE has is in the normal tax regime. Like that they have
Okay.
written. The recent question
No,
that
sir. It was regards to solar panel, which we discussed. So we
that
just
was
took
a
an
steel, no?
assumption.
That was a steel, no? Steel.
Yeah, that was steel, which we're talking about.
The solar panel that you're talking about it, huh? See the other
Yeah.
question also just recently one just what was the last question that we did?
No, no, that was the solar panel, sir. Before it, I was talking about the first question which we did. Actually, 13,80,000 depreciation had came, and then you had said, okay, additional depreciation of 6,90,000 should be done. Illustration two around, I guess.
Yeah, just a second.
Yeah,
Huh? Just,
I will. I have also noted it. Yeah, I will just tell you.
see this
Yes.
question.
No, 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 sir. This is about the borrowing cost which
Borrowing
you're
cost.
talking
This is
about.
the borrowing cost.
No, no, no. Even before that. Um,
So I'm just wanted to
no
show
issues.
you.
No issues. That's okay, sir. I will just
No,
refer
no,
it. Just
I've got hold with that question that you're asking, but I wanted to show you another question that language. That I
okay, okay.
understood your question. But just I wanted to show you the other question that we solved. The language of just a second. See this one. So this question, if you see,
Okay. Yeah. regards
So
to
this was the question that you're talking about. That was about that.
the Surya Fabricators
So
Limited, I remember
this
the
is the question. If you
company.
see this
Yeah,
question,
yeah,
it's a
yeah.
company. First of all, it is a company.
Correct, correct, correct.
So in this particular case, the question does not say that it is a normal tax regime or it is an alternate tax regime. That particular
Yes,
part is quite silent in this question. Okay.
correct.
And
Yes,
directly they are telling you computer depreciation.
right.
So now, therefore, the catch is that now all of you have got the answer of I think 1,30,000 rupees in this particular question, isn't it?
Yes, yes, 13 lakh 80,000. Yeah, around that. Yes, yes, correct,
That was
correct.
around the answer. All the students have got the same. Now
Normal
here,
depreciation. Yes,
yes, normal depreciation. Now you have missed the additional depreciation part.
correct.
Please understand what I told over here was that see when you get the question like this,
Hmm,
first of all you need to know that if you are a company or a partnership firm,
hmm.
then the alternate tax regime is not your default tax regime. Unlike
Okay,
an individual HUF, AOP, and BOI, for them the alternate tax regime is a default tax regime.
okay.
Meaning thereby I don't have to opt for it. For individual HUF, AOP, BOI I'm talking, I don't have to opt for it. But when it
Yes,
comes to a company or it comes to a partnership firm, I have to opt for that in this case. So therefore, it does not become a natural particular alternate tax regime for a company or for a partnership firm does not become a natural provision.
okay.
So
Fine.
therefore, because it is not a natural provision, the provision has to be very specific about it that you are in the alternate tax regime. And since
Yes,
the provision is silent about that, we will have to write a note, or you may say assumption, that because this question is silent about alternate tax regime,
correct.
therefore we have solved the solution as per the normal tax regime. Like that.
Okay.
But
Yeah,
when
yeah.
it
So,
comes to an
yes,
individual
yes,
HUF, AOP, BOI,
yes,
if
yes.
instead of Surya Fabricator, if it was Surya, that's it.
Yeah, yeah.
Then I would not have done the additional depreciation calculation.
Okay.
Because I know that he is an individual and for him the default tax
All
regime is
tax
the
is
normal
applicable.
provision. Means it's a normal thing for him. The default is the alternate tax regime. Sorry. The
Okay.
default tax regime is the alternate tax regime for him. For whom?
Yes.
For individual.
Definitely. So it's very easy now. For, like, thank you for explaining that. Okay, default tax regime is automatically applicable to the
Individual. Individual.
individuals, HUF,
HUF,
and
AOP,
other.
BOI. Perfect.
But only the exclusion is with regards to the company and partnership firm. That's
Yes,
it.
yes.
That
That for
assumption
them
note
it is
should
done.
be clear.
Perfect, perfect, perfect.
Very
That is
good.
all done. Okay. So,
Okay,
but
and
then for individual also you will have to write a note. Though you
acha,
will now what will happen for individual, you will not be taking the additional depreciation in this.
correct,
When
correct.
because you are in a default tax regime means alternate tax
Yes.
regime, so you will not do depreciation. But
Hmm.
even though you don't take depreciation, you will solve the answer, but you will take a note that the question
Okay.
is silent about whether he has
Yes.
opted out. Now you
Opted
will
out.
see the note, the language of the note will change. The question is silent whether this Mr. Individual has opted out from the default tax regime, which is the alternate tax regime.
Yes.
And because the
Yes.
question is silent, we have solved the solution as per the default tax regime,
Default
which is the
tax.
alternate tax regime, and hence we have not taken the additional depreciation.
Yes. Yes. Yes.
That is for
Very,
the
very
individual.
nice. I
Okay.
really
So,
appreciate this provision actually.
so this
And yes, the final one is ICDS for revenue recognition. So you were talking about certain principles. Do we need to just read it on our own?
no, read it once. When the next week with the session at that time, one of the days we will just get an opportunity to
Yes.
run.
Yes.
Very
Yes.
very
And
small
just
actually. We can finish it off
no
very
issues,
quickly.
sir. And just the final three principles which you were iterating now and then before the end of this part one. Can you tell me that? What three principles you are specifically targeting?
The Chellapalli is the main principle.
Acha, only Challapalli, right?
Chellapalli, on
Nothing
that.
else.
The three principles that I have told,
Correct,
that were
correct.
associated with only 39.4. There are 14 list, no? 14 list item. The big,
Okay.
the compartment, the old
Yes.
building,
Oh, yes,
sale in
yes.
higher, sale in higher, sale in lease back, all that things that assessing officer
Okay, okay,
power.
okay.
So for that,
Yes.
I have given at the start, when you read it, na, I have given that how to remember the provision in this table. So that 3 points we have discussed, na, old building or for which you have taken 100% deduction, all that.
Yes, yes. 35 AD deduction
35
on
AD example I
that
gave
three
you.
principles you're
Yeah,
talking
that
about.
principle is there in that particular, in that page itself, it is given. So just when you read the table, you just go through these three principles. That should be
Okay,
all.
you are just talking about 3 points as those three principles.
Exactly, exactly.
Okay,
How to
sir. I was
remember?
like,
Yes.
what principle?
So that is the thing. So to remember that particular point.
No issues, sir. Thank you.
Okay.
Done. Done with it. Thank you, sir.
So all of students are just quickly take a break and then we'll come back for part B and then maybe 35 80 the next segment also. Okay, just take a 10 minutes break, students. Then I think it's now 8:12. Just take 10 minutes break and we'll resume. So shall we start now? Perfect. Now see students over here. On the part B students, the WDV particular part. Now see here, this particular entire point, all of you will just pay attention. And by the way, that was the biggest this thing. Huh? Like if you can manage this particular this thing, and you can get a hold. Just ensure to keep revising this particular PDF part. Because the biggest chunk of your PGP only is this part only. And if you can manage this particular part, students, your load of PGP, more than 50%, I will say, will be done only by virtue of this. This is the biggest load bearing material. Now, students, let's come back. So, part B, students, of our discussion is the case of the WDV. Now, students, over here, as you can appreciate on one thing, the concept of the actual cost and the WDV is what we have considered. If you remember the format of the block, of asset, if you remember the format of the block, which you people also have captured in your notebook at the start of it, when the block format, depreciation which is actually allowed to the SSC, that is a WDV. Depreciation which is actually allowed to the SSC is what is the WDV. Question that arises now, rather just be careful. The three cases over here is the provision that I am discussing. The three case over here is nothing but the provision that I am discussing. In this three case of provision, you will find that the notional depreciations are being reduced. What is reduced? Notional depreciation is what is reduced, students. So in this three case, otherwise what is the provision? In the block format, students, actual cost minus what? Minus the depreciation which is actually allowed to the SSC. Now, in this three cases, you are going to find that notional depreciations are being reduced, which means an exception. So, these three are exception to the general rule. What is the general rule? General rule is that the actual cost is what is allowed as deduction in this case. So, let's have a look, students, over here. Which are those cases which are being there? Let's have a look, students. Where the notional figure of depreciation is reduced. Where the notional figure of depreciation is reduced. Which are those three cases? The first case, again, I'm repeating, students. What I told you in the previous slide, actual cost to the SSC minus the depreciation actually allowed to the SSC. Actually allowed is what is reduced to arrive at the WDV. So, is there any case when the depreciation is not actually allowed, but still notionally we are supposed to reduce it? So, see, have a look to these three cases. Which are these three cases? One is the case of the students, depreciation could not be absorbed in a year. Like, for example, students, my profit is 1 lakh. My total depreciation is 3 lakhs. Obviously, what could be allowed is how much is your profit. What could be allowed, students, is how much is your profit. Do you all agree? In this case, what could be allowed is how much is your profit. 1 lakh is your profit. So depreciation that could be allowed is only 1 lakh. Balance is a UAD that will be taken in the next year. Okay. So tell me one thing then, in that case, how much would be, students, how much would be your WDV in this case? So just take an example. Just take an example, students, 10 in this context. 10 lakhs is the actual cost. 3 lakhs is a depreciation amount. Unfortunately, your profit was not sufficient, so only 1 lakh could be reduced from the profit. So UAD is how much? 2 lakhs. So question arises, if actually allowed is only 1 lakh, so a WDV can only be 9 lakhs. In this actual cost, WDV is 9 lakhs. Answer is no. Even the unabsorbed depreciation portion, will that have to be reduced? Answer is yes. So therefore, you will reduce full 3 lakhs. So you will not do a split while coming. So your WDV in this particular case, how much the WDV would be? 7 lakhs. As per the provision of section 41 subsection 8, your WDV students in this case would be how much? 7 lakhs. I hope that all of you are clear with this, sir. So can we say that though actually allowed as deduction was up to the profit, which was only up to rupees 1 lakh, the notional depreciation of rupees 2 lakhs, the notional depreciation of rupees 2 lakhs would also be reduced while determining the WDV. Can I say that? So total in all, how much is the depreciation reduced? 3 lakhs. So my WDV is 7 lakhs. I hope that all of you are clear with this one. Every one of you. Now the next one, students, is this case. The SSC was not required to compute his total income. The SSC was not required to compute his total income for any earlier tax year. The usual case being a person whose income was exempt. Students, there is an example for that. We will discuss on that. And this 4110 students also, I will just take you through an example. So just let me give you those examples, students, for these 3 situations which are already been created, so that directly we can just try to finish it off this part through practical only, which matters. I gave you the example already, students, of the unabsorbed depreciation. Okay, now let's come to the next example. Students, just have a look over here. The income of an institution was exempt up to the tax year 25-26, and the exemption stands withdrawn from tax year 26-27. Okay, a machine was acquired in 2020 at a cost of rupees 10 lakhs and was revalued upwards in the books in 2023 by rupees 2 lakhs. So there was a revaluation done, students. Tell me one thing. Otherwise, can you do a revaluation for income tax purpose? Is the revaluation possible? Answer is no. Why? Because the asset enters into the book at actual cost. So where is the question of revaluation in this case? Unless there is a specific provision where some additions could be made in the subsequent year, unless there is what? Should mark my words now, because my next class on the foreign exchange particular thing would be there. Just write a note, students, on revaluation. Two or three lines. Revaluation under income tax. Please write. Quickly, students. Please write. Under the income tax law, revaluation is not allowed. Revaluation of the asset is not allowed. As the asset enters into the block, as the asset enters into the block, as the asset enters into the block at actual cost. As the asset enters into the block at actual cost. Full stop. Therefore, unless any particular provision provides for any subsequent addition or deduction in the actual cost comma the revaluation is not allowed. Full stop. Okay, so just keep this particular thumb rule in mind, because what happens, specific provision only can disturb it. Otherwise, if there is no specific provision, you just can't think of revaluation. Okay. So here, students, what has happened? Exemption was withdrawn from this thing. A machine was acquired in 2020, means when the exemption period was going on, at a cost of rupees 10 lakhs and was revalued upward, students, in the books in 2023 by 2 lakhs. So obviously we have to bring down that 2 lakhs. Depreciation charge in the books up to 31st March 2026 is rupees 5 lakhs in the books of students, of which 60,000 relates to revalued portion. First thing, students, we need to, if I have to go, now how we are supposed to, actual cost, students, was how much? 10 lakhs. Then you revalued it to 2 lakhs in this case. So your today, if you see, cost is appearing at 12 lakhs, of which 2 lakhs is revaluation. So I can directly take only 10 lakhs. Just let me take it value before revaluation. Now depreciation that I have claimed, students, is how much? 5 lakhs. In this 5 lakhs, 60,000 is the revalued portion. So therefore, in that case, depreciation without revaluation is how much? Depreciation without revaluation is how much? 4 lakh 40. So this would be compared with this. So your written down value would be 560. This is what happens in the case of second one. So now tell me one thing, students. In the case of an exempt category of an SSC, what happens? You have to reduce. Now please tell me, the exempt category person, for the period when the exemption was there, he was not claiming any depreciation. Why he was not claiming any depreciation? Because his income was exempt. And because his income was exempt, he was not claiming any depreciation. And because he was not claiming any depreciation, he was not allowed the depreciation. Because I didn't claim, therefore I was not allowed. That is how the things are, isn't it? Because I didn't claim, I was not allowed. And that exactly is the point. So over here, what they are trying to say in this case, over here, what they are trying to say, that even though you didn't claim because you were not accessible, we will reduce notional depreciation. On what? On your actual cost. But that actual cost should be without revaluation, and this notional depreciation that we are reducing should be also without revaluation. So therefore, that is what should be the parity that you should maintain, and that is how you are arriving at the WDV. I hope that this point is well taken. And then the last one, students, if you see over here, the last particular point, this one. This is about the composite business. Students, recall tea, coffee, rubber development allowance. Recall tea, coffee, rubber development allowance, students. Didn't I told you in that tea, coffee, rubber development part, all the P&L item, recall that? The entire deduction, expenditure or allowance. Okay. Now from there, you arrive at the profit. And from the profit, you do the split. 40% is your 40%, 60%, 60% agricultural, agriculture therefore exempt. So didn't I told you your actual deduction is only 60%, oh sorry, 40%, which is taxable. This discussion I already had earlier with all of you. Your actual deduction is how much? 40% only. This is what I discussed with you all earlier itself. So my depreciation, say for example, if my depreciation is 10, my actual deduction is how much? Then 4. Why? 60% is agriculture, not accessible. So how much is actual deduction? 4. So if 4 is the actual deduction, then you tell me from the actual cost. Students, tell me from the actual cost, in this case, minus depreciation actually allowed. So what? So say for example, my actual this thing is 100. In the balance sheet, the asset is actual cost price is 100. How much is the depreciation actually allowed to be? 4. So I should reduce only 4, no? How much should I reduce? I should reduce students only 4. That is what it is. Then you should reduce then in that case only 4 rupees. This is what it should be. 4 is what should be reduced. And then 96 should be double. They say no. They say in arriving at the WDV for this tea company or coffee company or rubber company for whom part of the profit is agricultural, other part is non-agricultural. So in arriving at the WDV for this SSCs, you will have to reduce the depreciation as if the entire business is accessible. What they have said, you have to reduce the depreciation as if what? The entire business is accessible, students. And if the entire business, which means they are using a deeming provision. So if the entire business is accessible, then how much I am going to reduce? 10. If my entire business is accessible, then how much depreciation? 10. 10 would be reduced and 90 is a WDV. This is a third one. So if you see, this is a third particular part, so the portion of this one, 271, rule number 271. Please have a look over here in this case, this example. Turnover 20 lakhs, depreciation 1 lakh, less other expenses 4 lakhs. Composite income is how much? 15 lakhs. Business income 6 lakhs in this case, which is taxable portion. Taxable portion of 40%, 40% of 15 lakhs. So 40% of 15 lakhs, how much is the business income? 6 lakhs. Isn't it? Now, depreciation deemed to be actual. So, in this case, how much is the actual deduction of depreciation? 40,000. But if you assume that your entire business is accessible, then how much is the depreciation, students? If you assume that how much entire business is accessible, then 1 lakh. In this case. So, the return on value would be reduced by how much? 1 lakh. Which in my example, I did the 1 lakh. So, that exactly the point. This is what it is, students, over here. Now, students, this particular part, if you can all, this students, I'm leaving you with this thing. I'll give you a hint, students. This, you will read it. It's not something you will not know. Just take a note of this one, students. I just want to know, I want you to catch some anomaly of the law. In the old act, and I was expecting at least in the new act, there is this some inconsistency that you find in this set of provision of 41.2 to 41.7. Some inconsistency is there. And I just want you to read this one. Obviously, you read it only on Monday. And when you detect it, primary students, in this case, you just let me know. Maybe on Tuesday or Wednesday, Tuesday for class itself, or maybe Thursday class. In the Thursday class, I'll just ask you, could you detect this particular part? Could you detect this particular part? 41.2 to 41.3. So just take a note of what exactly I'm taking mark over here. I am putting up across, say, this amalgamation. Just take this particular part. Okay. Just you read few things. This 41.3, 41.4 and 41.5. This much only you read it. And only if it has to come in the examination, it will come from this 4 only. There is some inconsistency that you will find, and you have to find some inconsistency in this case. And when they say same as above, everywhere it is same as above, so better you read this also. No? If same as above is given, then read 41.2 also. Students, are you ready for this one? So you please ensure to read these 3 things of now 4 things because same as above is there. And just I need to know whether you can pick up this inconsistency. Okay, this question in any case you'll the inconsistency if you pick it up you'll come to know. But this question anyway, whether you refer or don't refer doesn't matter. I want you to just check out whether you can refer this inconsistency or not. If you can pick up this inconsistency, friends, it would be a brilliant observation. And I will just expect all of you, to make a honest attempt and just see what exactly is that inconsistency which is there still existing in the new law. Okay, perfect. Radha, just try it out, at least all of you. Yes, yes, yes. Fine. Any query, students, now? So this covers your most voluminous segment of depreciation, students. See, this is the second file of actual cost. Earlier file was also of the depreciation. If you're that 4th August file that you all have. So depreciation and actual cost. This precisely covers these two files, students, is what you need to always manage it out. And now how do you do the managing part? You have the just a quick recap of the thing, students. Just pay attention. In the first particular part, if I have to recap, this therefore becomes an important revision particular time that you will take a note of it from depreciation and this particular entire segment. So if you can recall that, we started off with this entire basis of depreciation. You have the SLM, you have the block SLM, forget it. It is an optional scheme for one undertaking. The block scheme is a game. The real game is the block scheme, students. And you have the format of the block. In this case, format all you know. The real catch is that money payable, students. Radha, isn't it? Very good. You remember the case laws and all. That's really very good. So the real catch is that, students, money payable. And that money payable, unless that money payable happens, students, the asset will remain. And therefore, if there was asset which was discarded without money being payable, then remember on that asset, answer is yes, Yamaha Motors, Delhi Airport. That was a discussion point number one in that basis. Second point was, students, eligible asset and eligible rate. So what was eligible asset? Tangible, intangible. In intangible, there was a disqualification on goodwill. In the tangible particular part, students, remember that in the tangible part, herein, just be careful. The class of asset is three class, primarily plant and machinery, building and furniture. And within each class, you will have to find out the rates of depreciation. And because if there are more than one rate for each class, then that much number of block in that class has to be prepared. If for each class, if there are more than one rate of depreciation, then you will have to prepare what? Prepare that much number of depreciation. No, rather it is three. Plant and machinery as a one class it will represent, and in that you will find multiple items. Okay. What is the eligible rate? Rate also you have to find out correspondingly. That is also we have discussed. We have also discussed the additional depreciation part. We also discussed that in the alternate tax regime, additional depreciation is not available. 50% of the additional depreciation would be allowed in the current year if the asset is put to use for less than 180 days, and the balance 50% will go in the next year. Then we went to the third category, which was the condition. In the condition, we have seen that the ownership, Mysore Minerals Limited, Supreme Court, that the SSC should have the possession and the control over the asset, should be using the asset for the purpose of his business profession to the exclusion of the other person. And the exclusion, whose exclusion, we all know. Once that condition that was there, so therefore we discuss hire purchase case, lease case, isn't it? Those two important cases we discussed. Who would be eligible to claim the additional depreciation? There was one exception when the lessee was allowed a depreciation. Otherwise, we know it is the lessor who claims the depreciation, but there was one exception when the lessee was claiming the depreciation. That was in respect of a building which was constructed on a leasehold land. Then the SSE who has incurred the expenditure, students who has incurred the expenditure in construction of the building, that SSE would be eligible to claim the depreciation allowance. After that, students, if you see in this regard, after that, students, if you see what we have discussed after this, then the hierarchy of set off current year depreciation first, Thereafter, the next one was, students, the broad fraud business loss, and finally the UAD. Isn't it? That exactly what was the first particular entire scheme. The second theme was, students, the concept of actual cost. Why concept of actual cost? The actual cost was important because actual cost, and then part B was WDV. WDV, very small thing, because in three cases there was some notional deduction was given. Otherwise, what is reduced is the actual depreciation allowance. But in three cases which we have identified, the notional depreciation is allowed to arrive at WDV. Okay, so the game was, what is actual cost? Actual cost is Challapalli Sugar Mills Limited, amount which every person with a commercial understanding will know what would be allowed. What is this cost? And therefore, the principle I already laid down. Any expenditure linked with the process of bringing the asset into existence or putting it into working condition is to be capitalized, added to the actual cost. Then we discussed the concept through various statutory provision. There are some reduction, then there are some additions. What is reduced? Technically, four things. Like the 10,000 above, any expenditure on the on the asset which you have paid in excess of rupees 10,000 on a single day, otherwise than by the way of those prescribed means, and the other things that you are aware. What is that? In this case, subsidy, and thereafter, students, subsidy or a portion of the cost met by the other person, and last but not the least is the GST or the other duties and taxes on which you have taken the credit. And then there was some additions. Additions also, the list I've already given you, starting with the Challapalli 2, ICDS 5, ICDS 9, even the foreign exchange fluctuation that we have not touched upon, ICDS number 6. All these were the part of the additions thing, friends. And we have discussed all this thing, and that is how the actual cost concept was being completed. Then last, students, 13 cases. The 13 cases of list has been given. What will be the actual cost in these 13 cases? That is what we discussed before the break. Isn't it? I told you how to remember the chart. Three principles I gave you there. This is how you will read through the chart, and the 13 cases of actual cost has been made in that context. Is that point clear to all of you, students? Every one of you? So this is precisely how you revise the entire gamut of the biggest particular concept, which is of the depreciation and the actual cost runs. Now, students, therefore, now we go to our next theme after this. In the common particular parlance, this is the biggest one. Okay. Now, students, we go to our next particular theme. And the next theme, students, over here is that this. I think that PDF, students, I suppose that. Anyways, can we extend the next particular class? Because I think this PDF is not there. Maybe half an hour more, next particular session onwards. Was supposed to be. So the next theme, students, I'll tell you the plan now. The next theme primarily would be our deduction of the capex, which is the capital expenditure. In the capital expenditure series, remember that scientific research, your specified business in that context. And then there is one more section which has been there. And then there is a practical question that we will solve it. Immediately after that, students, we will move to the this one. Immediately after this, we will move to, if it is possible for your students, just as a homework, students, if it is possible, please, tomorrow, students, Sunday is there. So if I can just give you one section 35 part that you can read in the new act, I will just let you know. So just give me a favor, one section at least if you can read and come. This is something that you have done it in Inter-C also. Section 45, students. Section 45. In the module page number, please take a note of it, students. Module page number 393 to 396. 393 to 396. Or maybe 397. Students, just in your ICAI module, 393 to 397. Just give me the favor, just read this much and come and be ready for this one. 393 to 397. Will that be fine, students, to all of you? Please confirm. 393 to 397. So the expenditure on that scientific research, students, I will be taking a bit fast. Therefore, students, it's something that you have done it. 2-3 points are very important in that, and therefore we will do them. That is where I need to touch upon. Rest of it, students, I will just go a bit on this one. This much only I require. This one, that section 45, scientific research part, students, so that we will be in a position to do practical questions also in this. Because I have formulated a practical question also, a bigger one, a bigger question which is there. So I want to do that also. Fine. Again, I'm repeating, students. Page number is 393, 3.93 to 3.97. Fine, students. So 4 pages there of this PGP. Scientific research reduction, I think in Inter-C also you people have done it. Just go through it once, these 4 pages tomorrow, being a leave, and then I think then we are sorted out in this context. Then, friends, the presumptive section, which is like 40, here also it is there in the final C also. Resident presumptive sections you will do here. Non-resident presumptive sections you will do in error taxation module. Resident presumptive sections I'll do it through practical questions only. It's not a big particular section of threat. So this last presumptive provision which has been there, I'll do it through practical questions only. So that way it will help you to directly do the application part. So this was the easiest particular section. So which is there, we'll do it through that. And then, students, then the capital gains is going on. I will use this 20 minutes to do more practice of the questions, like the actual cost, depreciation, interplay, and say other particular sections which are being there. Fine, students. So I'll see you then in the next particular class. Be ready for this one. Just read this section 45. I gave you the page number, students, in this case. Unfortunately, it's not uploaded. Otherwise, I would have just pushed it. See you then, students, in the next particular class. I'll extend it next session. Fine. Any doubt, students, that you have for the current session? Radha, Kanaya, Muskan, any of you? Just let me know.
No, sir. Very happy with today's session, and I'm awaiting for the next session with whole lot of energy. And I will definitely do whatever you said. So I promise you that, and we'll interpret the provisions with regards to those 3 sections.
Yeah,
Definitely,
three sections, three
that
sections.
inconsistencies.
Yes,
Yes,
the inconsistency which has still has
correct.
been there in the new app. Perfect, very well.
Yes, sir. Thank you, sir. Yeah.
Thank you, thank you. Good night to all of you. संकेत जी बाय बाय कन्हैया संकेत जी बंद कर देते हैं